Consider risk as a triangle. This triangle, in one corner is the asset, in the other corner you have threat, and the third corner you have vulnerability. When all these three things coexist, then you will have the risk, right? Now let's see one example. Suppose you have two houses, one house on Chennai ECR and one house in Ooty. These are your assets, two assets. The loss of these assets will cause you economic loss. There is no doubt about that. So, they are assets. Now, peril. Let's take the peril, the threat of tsunami. When we talk about this tsunami, your house asset in Chennai ECR is vulnerable to loss, whereas your asset, your house in Ooty is not vulnerable to loss because of the tsunami, right? So the asset in Ooty is not vulnerable to tsunami loss. It is not possible to have tsunami in Ooty. It is not vulnerable. There is no threat. You have an asset. At the same time, the house at ECR, Chennai, is vulnerable to tsunami threat. A peril of flood. Suppose there is a multi-storied building, 2 floors, 3 floors. You are living in second floor and your tenant is living in ground floor. Okay. Now, the flood is a threat, it's a peril. Now, vulnerability question comes when it comes. The people living in ground floor are more vulnerable compared to people living in second floor for the flood. So it changes. The same peril, the vulnerability of the asset keeps changing. So coming back to your house in Ooty, let's consider the peril of landslide. When we consider the threat of landslide as a peril, the house property in Ooty is vulnerable while your property in Chennai ECR is not vulnerable to landslide. So the risk perception varies based on the threat and the vulnerability of the asset to the loss.